Hey everyone, Coach Investor back with another Lemonade video for you today. So in today's video, we're going to discuss a couple of things. First up, why did Lemonade skyrocket this week above $80? Second, we're going to discuss an important point that was mentioned during Dave Lee's interview with the CEO Daniel Schreiber. I think this point has not been talked about a lot, and I think this is one of the major reasons why I believe Lemonade could be one of those major success stories in the next couple of years. So we're going to look at that as well as the graph right now. But before I jump into that, if you haven't subscribed to this channel, I would really appreciate it if you hit that subscribe button. We're on our way to 6,000 subscribers, so that would really mean a lot. And if you like these videos, leave it an early thumbs up, as it really helps me out grow the channel and get my videos out there. So without further ado, let's dive into this. Right, so as we can see here, after weeks and weeks of the stock lingering around those $45 to $50, then it tried to go back up, break that $68 mark, failed, going back down to that buying zone, going back up, down, up, down. It's really been a roller coaster if you ask me. But this week, the stock, as you can see here, this huge green candle finally broke out of all of that resistance and closed that day above $80. The next day it even continued, even though you can see right here a huge wick from the downside, meaning people were selling and selling. But overall, that was a green day, a buying day for Lemonade. What you could expect is it to test that big resistance at $86, $87, and then as well the biggest one, that's the all-time high at $88, maybe intraday trading $90 or so. But if it fails, then yes, maybe we could see the stock retrace to around about $75 or so. All right, so first up we have, why did Lemonade skyrocket this week above $80? Because the stock has been lingering around to those $60 to $70 marks for weeks now. So why the sudden jump above 70, above $80? So here it is. So Lemonade stock jumps 20% after long pitch at Motley. So if you don't know what the Motley is, it's basically this private financial and advising company based in, I think, Virginia or so. They've been around for, I think, almost 30 years right now. You can read their articles there for free, but you can also subscribe to a couple of services that recommend and advise you to buy into a stock. Obviously, they can do that because they are financial advisors. But basically what happened here is that in one of the subscription, I think was the stock advisors, they got an alert or an article saying that, well, yes, I think they think Lemonade is a really, really good play for the long term. Obviously, right now the market reacted to that news. The systems, the algorithm found out about it, and the stock rose directly 10%. The next day, another 10% or so. Overall, the stock is up, I think, since then, since that Thursday, around 20%. So most of you probably might ask yourself right now, so right now is probably not a good time to buy into Lemonade because, well, this is just an overreaction on the positive side, seeing that, well, their subscription service is being used by, I think, hundreds of thousands, if not a million people. I think this could be a good reason not to buy right now because of the stock going up really fast in just a matter of 2 days, a jump of 20% for a stock that has been lingering around the same prices for months right now. It might be a good thing to wait for the stock to come down. But again, if you're a long-term investor, I've been saying this since my first video, since the IPO came out, investing in Lemonade is something that you need to hold for the next 5 to 10 years because I believe this stock and this company are going to be super, super big moving forward. And this actually leads into my second point, which was something that has been said in Dave Lee's interview with the CEO Daniel Schreiber. So Dave Lee basically asked the CEO about the whole geographical situation, and then the CEO actually answered something very, very pretty smart that none of us really realized. We probably knew that, but we didn't realize how big this was. We're going to listen to that right now.
Yes, it is, but it is unusual, and it goes back to the kind of the fundamental differences that we've discussed. It's not the way insurance has been to date. So all the brands that we're familiar with in America stop at the water's edge. You go to the UK or to Europe, France, Germany, wherever you want to go, and you ask them about State Farm and Allstate and Geico and Progressive, they've never heard those names. And you come to the US and you talk about Generali or AXA or Allianz or some of the largest names in Europe, and we've never heard those names in America. It's kind of stunning, these huge conglomerates that stop at the water's edge and don't cross over.
And then he goes into something even way better, something that most of us, again, probably know, but are not really putting this in our evaluation of such a company, which is basically saying, well, like you said right now, those big insurance companies, generally in Europe, Allianz or MetLife, State Farm, whatever, United States, they all stay one side of the ocean. Unlike companies like Uber, Amazon, Airbnb, they are worldwide, they're digital, and this is something that Lemonade will be trying and is currently doing as well. They're trying to be this global insurance company, and I'll just let the CEO continue on that point.
In the United States, before we get to Europe, in the United States, our largest markets are Texas and California. These are the largest states. We have 0 employees in Texas, and we have 0 employees in California.
Like he said, in their biggest market in the US, they have no employees, 0. In France, 0 employees, Germany, 0 employees, the Netherlands, 0 employees as well. This means that they can grow in other markets without really having to have huge expenses going into that market. They don't need those fancy huge buildings. They don't need all of those fancy schmancy things that the other major insurance company have. And that's something really unique to Lemonade regarding the insurance industry. Obviously, high-tech companies are used to that, but even they have offices in Europe. Right now, Lemonade has 0 offices in Europe, no employees in California, no employees in Texas, and yet those are one of their biggest markets. So who knows what the future holds for Lemonade if they can continue to grow into markets without really needing to build huge buildings or surround themselves with a huge team on the spot. Obviously, maybe in the future that could be the case, but right now they can keep expanding. Obviously in the United States, they're not available in all states right now. In Europe, they can keep expanding and expanding without really needing to build the whole infrastructure, physical infrastructure to start a company in Europe. They can stay in New York or in Tel Aviv, doesn't really matter, but the company will continue to grow and grow because it was built on technology. The whole infrastructure was built from the ground up. It's like Amazon and Walmart. He says that as well in the interview. People said, oh, if Amazon will be a problem for Walmart, Walmart will probably copy it or buy Amazon. We all know what happened a couple of years later. Amazon is now one of the biggest companies in the world. Walmart is big, but Amazon is way bigger. Before I end this video, I want to know your opinion on Lemonade. If I forgot some interesting things from that interview, let me know down in the comments below. And if you want me to interview Dave Lee, actually, let him know that I want him to interview in his next videos or on Twitter. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed to this channel, I would really appreciate it if you hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.